So you're welcome back, my dear professional students. Now let's prepare the consolidated statement of financial position. I'll have it here. So for unitarization, PLC, I'll have my consolidated statement of financial position, statement of what? Of financial position, as at 31st October 2014. Okay, so I'll have my assets, okay, and I'll have my non-current assets. So let's go to the question and start picking the figures one by one. So in the question, in my statement of financial position, the first item I have there is my property, plant, and equipment. And for unitarization was 24,360. And for famous is 7,560. Please, you do not prorate items of statement of financial position. Items of assets, liabilities, and equity are not prorated. So we are going to consolidate fully, even though we acquired the subsidiary during the year. So I will add 24,360 to 7,560. The addition of the two gives me 31,920. Then we'll adjust it for the consolidation adjustment that we made on the equipment. So specifically on this fair value adjustment of 1,200. So we said we are going to add it to the equipment. If you remember, you add it to the equipment. So if I add 1,200, it comes at 3,120. And we're going to deduct the additional depreciation. And the additional depreciation was 120. So I will deduct 120. So that leaves me at 33,000. So my property, plant, and equipment that I will present in my statement of financial position will be 33,000. So I will have property, plant, and equipment, which is usually shortened as PPE. Property, plant, and equipment. I will have it as what? 33,000. Then I will go back to the question and pick the next point. In the question, the next item there visually was current assets. However, after this PPE, there is supposed to be investment in subsidiary, which we determined in our workings under purchase consideration. Yeah. This investment in subsidiary of 5,760. And that investment in subsidiary, we said, is going to be cancelled out against the equity of the subsidiary. And we cancelled it out here. Okay, we cancelled it out against the net asset acquired in these workings here, which resulted in a goodwill of 2,700. Okay, so we'll consolidate the goodwill of 2,700. So I'll have here my goodwill, which is 2,700. Also, correction, the next item there is now current assets. That of unitarization was 9,600. So we have 9,600. You add that of famous of 3,960. So you add 3,960. The addition gives me 13,560. Then we'll go and adjust them, or adjust it for consolidation adjustment. And the consolidation adjustment that will affect the current assets, first to be the unrealized profits that would affect the inventory. Okay? The unrealized profits, this 480, that we say we will deduct from inventory. So if I deduct 480, then I will have 13,080. And finally, which was our final workings here, was the intragroup sales, which we said we will deduct from trade receivables. Okay? Then we'll add to cash in transit. Abi? So let's deduct from trade receivables. That means you will deduct 360. That leaves me at 12,720. Then you add this cash in transit. Cash in transit of 120. Then that leaves me at 12,840. So we'll transfer 12,840 as part of my current assets, or my current assets to be precise. So I will have current assets. And that's 12,840. If you add these three together, it leaves me at a total asset. And what will be my total asset if I add these three together? That will be 33,000 plus 2,700 plus 12,840. And that gives me 48,540. So what do I have? 48,540. 48,540. Having determined that, then the next item I would have is my equity and liabilities. So I'll have equity and liabilities. So we have here equity. So the first item in equity will be the ordinary share capital, and to be the ordinary share capital of the parent company. So let's go to the question and determine the ordinary share capital of the parent company. As given in the question, the ordinary share capital of the parent was this 6,000. So let's transfer it straight on without wasting any time. Transfer this 6,000 as the ordinary share capital of the parent company. 6,000. And you add the consolidated retained earnings and the consolidated retained earnings will be what we have computed initially here for my consolidated retained earnings, okay, which we got as 21,420. So I will transfer it here as 21,420 as my consolidated retained earnings is 21,420. If I add these two together, it gives me 27,420. But we have omitted some items. So I think I have to just clean this. Let me use the medium cleaner. We have omitted some items because the parent company issued, in addition to this 6,000 that he had, he issued ordinary shares to the subsidiary. Let's go to the purchase consideration. Yeah, this is it. He issued ordinary shares. So we're supposed to add, to that 6,000, we're supposed to add 960, which leads me to 6,960. And we'll have a share premium of 4,800. So let's transfer 6,960 as the share capital instead of merely 6,000 to be 6,960. So we'll have 6,960 and we'll have share premium of 4,800 before we now have the consolidated retained earnings. The consolidated retained earnings of 21,420. Okay, this is correct now. So if we add these three together, the 6,960 plus the 4,800 plus the 21,420, the addition of the two gives me 33,180. Then from there, I will add my non-controlling interest, which is my NCI. So I'll have my NCI, my non-controlling interest, which we have worked out in our workings. My non-controlling interest, we worked it here as 3,660. So I will have it in my statement as 3,660. So if I add these two together, 33,180, and I add 3,660, that gives me 36,840. And that is the total equity. Now, the liabilities. My liabilities. So let's go to the question and see the liabilities that we have. Okay. So we have non-current liabilities. We have a 12% loan notes. For unitarization was 1,800 and for famous is 2,400. So I will add the 1,800 to the 2,400, which gives me 4,200, the 12% loan notes. So let me go to my consolidated statement of financial position. Then I will have my 12% loan notes under the non-current liabilities. So my non-current liabilities I will have 12% loan notes. And that was 4,200. Then we'll have current liabilities. So we'll go to the question to determine the current liabilities. And these are current liabilities. For unitarization was 4,920. For famous was 2,820. So I will have 4,920 plus 2,820. The addition of the two gives me 7,740. Now you see this 7,740. I will adjust it for this consolidation adjustment on the intragroup sales, where we said we will eliminate the trade payables through a debit of the trade payables. So we'll deduct 240. So I'll be left with 7,500. So I'll transfer 7,500 to the statement of financial position. So I will have 7,500. So let me add these three items together, which is the total equity of 36,840. I will add my 4,200 and I will add 7,500. Then that leaves me with 48,540. 48,540, which represents my total equity and liabilities. My total equity and what? And liabilities. 48,550, which we'll expect to be equal to your total asset. Okay. Which is 48,540. You will see that the two are the same. They are equal. That means we are on the right path. So now, we are through with this consolidated statement of financial position. You see, in the exam, it could happen that your figures will not jive. The total assets will not be the same as the total equity and liabilities. Please, you need to move forward. You don't want to start looking for the figures up and down. You need to go on to the next question. Don't spend too much time on that. As soon as you see that it doesn't balance, just move forward. Move forward and go and spread your tentacles. Get marks from other questions instead of wasting too much time on a particular question. That's the advice I will give to you. So we're going to stop here for this. In the next video, we will look at preparation of the consolidated statement of changes in equity. So thank you very much. See you in the next video.